Hi everyone, and welcome to our third of our 3 lessons in our Unit 8 on funding. In this lesson 8.3, we're going to talk about business professionals and business valuation. Now, often when we talk about using business professionals for informed decisions. When running a business, making sound and strategic decisions is crucial for success and growth. And sometimes these decisions require expertise beyond what your internal team possesses. And so in those cases, seeking assistance from professionals who specialize in advanced business decision making can be highly valuable. And collaboration with various types of professionals can significantly contribute to making informed decisions and achieving growth. So we're going to talk about professionals for advanced decision making. And there's different categories, starting with management accountants. They specialize in financial analysis, budgeting, cost analysis, and investment evaluation. Next are data analysts. They examine extensive data sets to identify trends, patterns, and valuable insights. Next is market researchers. They conduct research to gather information about target markets, customer behavior, industry trends, and competitive landscapes. Then there are financial advisors or analysts. They provide guidance on investment strategies, risk management, capital allocation, and financial planning. After that are strategy consultants. They develop and implement effective business strategies to help organizations achieve their objectives. Now, other professionals for advanced decision making include technology consultants. They assist businesses in leveraging technology to drive growth, optimize IT infrastructure, and implement digital transformation strategies. You also have human resources consultants. They provide guidance on talent acquisition, employee engagement, performance management, and organizational development. Legal advisors assist with legal matters that impact advanced business decisions such as contract negotiation, compliance, and intellectual property protection. And finally, there are something called actuaries. These specialize in assessing and managing financial risks, particularly in insurance and pension industries. They can provide insights into risk management, risk assessment, pricing, and financial projections for decision-making purposes. So let's talk about business valuation and its purposes. Business valuation is the process of determining the economic value or worth of a business entity. It involves assessing the financial and non-financial factors that contribute to the overall value of a business. The monetary worth of a business is determined by reviewing the company profits, losses, assets, debts, and current predicted market conditions. Business valuation is conducted for various purposes such as mergers and acquisitions, sale or purchase of a business, raising capital, financial reporting, estate planning, or resolving legal disputes. And professional valuations provide an unbiased and accurate assessment of the business's worth. So let's talk about the methods of business valuation. First is something called the market approach. This determines the value of a business by comparing it to similar businesses that have been recently sold or have comparable financial metrics. It relies on market data and transactions of the comparable business to estimate the value. Next is income approach. This determines the value of the business is based on its expected future income or cash flows. It involves estimating the expected future earnings or cash flows of the business and applying a valuation multiple or discount rate to calculate the present value of those earnings or cash flows. Next is an asset approach. This focuses on the value of the business's tangible and intangible assets. It involves assessing the fair market value of the business's assets, such as equipment, real estate, and intellectual property, and subtracting liabilities to determine the net asset value. Finally, there's a combination approach. In some cases, a combination of the above methods may be used to arrive at a comprehensive valuation. For example, a combination of the market approach and the income approach may be used to derive a more accurate valuation. All right, and so that is our 8.3 lesson in funding, where we talked about analyzing the components of business valuation so that you could pitch to a potential investor to fund your company.